Hey guys, Ron here once again. Just wanted to go ahead and create this video real quick on trade structuring and the power of spreads. I really wanted to cover this because I know a few of you are still confused about spreads overall, and you may not believe that you have the potential to actually make more money doing spreads as opposed to just doing a single put or a single call. And the one thing I like to say is you always have to analyze the risk, one, based on your account size, and two, based on the expected move that you're expecting the stock to do, especially for this strategy that I'm about to cover here. This is a trade I took on the suggestion of one of the traders in the group who was looking to take this trade, and he was a little wasn't 100% sure on the trade, so I said, hey, you know what, I'll take the trade with you. We did not end up doing the same thing. I actually ended up doing it this way because I felt it was the safest way to do it if I was going to take the trade in the first place. And for the risk to reward, this was the best bet, and it obviously it did work out for me. So I'm going to go ahead and cover it. The trade I took on this case was BLK, so let's go ahead and cover it. This was a trade I took on 313, guys. I initiated this trade on 313, and as you can see here, it was a spread, in the money call vertical spread. So this was a call vertical spread, okay? And as you can see here, I collected, it was the 420s and the 422.50s. It's a $2.5 spread, okay? So that's all it was, guys, a $2.5 spread. And what I'm looking to do in these is basically collect way more than half in order for the risk reward to be worth it. So if this is a $2.5 wide spread, my max risk for a total loss would be $2.50. So that'll be $250 per contract. Let's say if I lose everything, right? So if I'm collecting premium, it's not going to be $250, but you understand that the difference is $250 per contract. So whatever I collect, my total risk is going to be the difference. So in this case, I collected $204, guys. Okay, so I collected $204. So my total risk for this trade is the 56 cents or 46 cents. Okay, so I collected, let's go ahead and do the math on that. So I collected $204, right? So minus the $250, you got 46 cents at risk. Okay, so you're going to multiply that times 10, which I did here. So you have 10 times 100, and you're going to get $460 is my total risk, plus any additional fees or whatever they're charging me, right? So $7.0945, whatever. So $460 plus any additional fees was my total cost for this trade. But as you can see here, I collected roughly $2,029. So let's go ahead and do the math here. We collected $13.29 on the side that we collected. So we collected here. Let's go ahead and check that out. So I collected $13.29 for the 420s. Okay. So the 420s, they gave me $13.29 per contract. Again, times 10, times 100. And then for the 422s, I collected or I paid for $11.25. So $13.29 minus 11.25, you're looking at 204, guys, okay? So 204 times 10 times 100. All right, so I collected $20.40 for this, okay? So $2,040 in my account to put on this trade. And let's go ahead and look at the chart and see what that looked like. All right, so when this trade was brought to my attention, the main factor is that this was a black candle. The first thing I told him was that this is not an ideal play, one, because it's coming off of this rebound here. But again, the strategy is still the same. The plan is still the same. So if I do believe that it's going to come back to this level, which was my target, right? That's why I did the 420s and the 422s. So in order for this strategy to work, one, I need to give it time. And two, it needs to bring me out of the money for this strategy to work, right? So this is how I did this trade. So I said, okay, well, I need time. So I can't do a single put because it's not going to work. And if I'm going to do this, I want to risk as little as possible to make a decent amount of profit. So if I'm risking $460 to make $2,000, I'll take that bet. I'll be glad with doing that. And obviously, if it goes against me or if it starts to waver because you're doing a spread, The only problem with spreads is depending on the stock, the liquidity, you may or you may not be able to get out of them right away. You may need for it to come back a little bit towards your side, and then you'll be able to get out and still preserve some capital. But if it's a highly liquid stock like or ETF like the SPY or something like that, you should be able to get out with no problem when it goes against you, reducing your risk significantly as far as how much you're losing. But here, as you can see, what is my gain here? What is this risk? 1 to 4. So I can make well, how many times? So 5. So I'm risking 1 to make about 5 times as much here. I would say making this play, right? So this was the original play. I was not happy. This was another black candle here as well, if you guys are familiar with the black candle setups. And this was a much better play here, I would say, but it also failed. As you can see, it did try to gap down and or go lower on this red candle, but it failed to go lower. So overall, the black candle setups in this one's failed. Overall, BLK, when it has black candles, they do well. So here was one here that did fairly well. So this was where the confidence was coming in to take this trade. So the overall trend on the daily was going lower. So when it came up here, it appeared as if, hey, this may be the bounce and it's going to continue lower from here. But obviously it failed. But because I wasn't 100% sure that I was going to be able to make that move lower in the next couple of days, that's why I gave myself an extra week. And I said, well, you know what, if I'm going to do this play, I want to give myself some time so that it has time to play out. Because I did not have that many supporting factors except the overall trend that it was going lower. So the RSI was not over the 80 mark here or anything like that. But you know what? I said, you know what? If you're going to take the trade, I'll take the trade just to show you that, hey, it can still work if you just plan it out correctly. And this is what happened. So obviously the trade went against me for the week. It wasn't until the following week, until pretty much the day of expiration, that it started to come back my way, which is why you want to give yourself plenty of time. So as you can see here, the trade came my way, and I did manage to get out of the trade. I almost let it expire because it was pretty close to expiration time before it actually stopped me out. But, applying the same strategy, the same management system as in the boxing strategy, when I followed it down, but when it came back above 14.17 or 14.18, it was getting a little close to bringing my position back out of the money, or at least my 420s. So I got stopped out when it hit the pivot, which was around 4.19 or something like that day, or 4.18. It was in that range. So I had to get out. And the price actually ended up going slightly over 420. And then it came back down, and as you can see here, it ended up closing beneath my spread. So had I kept it, I would have been able to capture the entire profit. So how much did I make on this trade? Let's go ahead and take a look. So when I closed it, I had to buy back those 420s for $959. And I sold the 422s for $92. So minus $92. So $867 from my 2,040. You're looking at about $1,173 profit, guys. So I was able to profit $1,173 for putting up $460. So $460 divided by 1173. What kind of return did we get here? Divided by 1173, and you're looking at a 39% return. Oh wait, 300. Yeah, am I doing the math right on this? Let's do the math. Let's see. Oh wait, 1173 divided by 460, because it was the other way around. All right, so I did 255% return, guys. All right, 255% return, because what we put up to work was the 460, and the 1173 was the result. So I made 255% return on this play by doing it as a spread, as opposed to doing a single put, which would have obviously not worked out or lost significant value by the time that this came around. And as you can see, I put time on my favor, because what happened here? This thing lost so much value that I was able to collect $13,000 and buy it back for $959. That's the power of theta and time decay, guys. Putting time on your side is powerful, and you have to give yourself an edge. And this is what I want you guys to understand. There is power in doing spreads and selling to collect premium. So you have to understand that. So you see how much time I gave myself? I analyzed the trade. It wasn't the best entry. It wasn't at all, but I was like, you know what? If you're going to take the trade, you know what? I'll take the trade with you and I'll manage it accordingly. He ended up doing it as a put, and I think he did the same week's expiration, so he was not able to let it play out. But this is what you have to look at. So if you have a trade in mind, because this was my target down here, and obviously that's exactly where I went, and look at that. It's like almost to the dot, like, you know what I mean? So you have to kind of analyze how much time does this thing need to actually do that move. So as you can see here at the top, it tells you 1 week standard deviation. What is the expected move? So from 4, we took it here 426, went up to like 439, so about $12 up, and then about $12 down. So you see that? So that's what you kind of have to look and analyze. You got to look at everything and kind of plan your trade out. Don't rush into anything. Just look at it, analyze it, and see how it's going to work out for you and what kind of strategy you need to do to make sure that you actually capitalize on the trade. And that's pretty much it, guys, for this video. I hope you guys enjoyed. Hope you guys learned something. If you have any questions, please don't hesitate to reach out. If you have not taken the Box In trading course, go ahead and check it out. It is helping a lot of traders double their accounts already within 2 weeks of taking the course. So I highly recommend that you guys check it out. Thanks for watching, guys, and I'll see you on the next one.